Are we live? Live started. Okay. Now, very good evening, everyone. How are you all? Everyone fine? Super. Very good. Okay. First, can you let me know is the video, audio, everything is fine or not? Audio, video quality is good or not? Then we'll start today's test. Today live class. Okay. Let me know. Now, the last class we started business combination. We have completed only the first part of this particular chapter. Actually, the chapter has been divided into, I will say, four parts. One is, I will say, simple acquisition. In that, normally IC asks question for formation of subsidiary. Then reverse acquisition. Then business combination under common control, we can say, and the last is demerger. These are the four topics which for which the question has been given in ICS study material. So of course we assume that question will be of that nature only. I mean, from my point of view, from examination point of view, the first topic is very important. That is what? Simple acquisition. That is very important. Got this point? Already we have covered that. Already all the points are covered. There are 2-3 points are left that I will do today. First, let me know any point which you have not understood in the last class. If that point you have not understood, I'll just have a recap of that point. And the two questions I have asked you to do it by roll. The two question, what was the question number? I think the question number was what? What about the question number? The 44. One was the 44 and one was, I think, 20 something. Have you done that? Both the questions? In that two questions, any doubt? In that two question, any doubt? If no doubt, you can say yes, sir, proceed, then I will proceed. Then I will not take that two question. Acha, question 22 and 44. That two question you have done. If no doubt, I will proceed. Ah, if there is some conceptual doubt, then only ask. Then only ask me. If there is some calculation doubt, if you have done some calculation mistake, of course, then so you can rectify that mistake by your own. So I think conceptual no doubt will come because I have covered all the points. Okay. Contingent consideration. Payment to founders, shareholders means employee. Yes. Now just try to understand in that question, one point was given that payment, it has been agreed to pay one of the founders, shareholders, some amount, I think 20 lakh, 30 lakh, that was the amount. Correct now. If they continued job like this, means if suppose just try to understand if that employee means that employee shareholders leave the job, so can you see it will forfeited, therefore it will not be included in the purchase consideration. So that amount was not included in purchase consideration because of that reason. I hope now you have understood. Contingent consideration, so I have said now that point already I have explained. Means let me come to that point again. Question number 44. This was the point. So what I said, as per point number A, the deferred consideration was 35 lakh. And if the payment has been done more than 35 lakh, that is based on some condition. So payment more than 35 lakh is contingent. Payment more than 35 lakh is contingent. Okay. But you can see they have not given fair value of contingent consideration. So what I have said to you, just try to understand. Whenever there is a contingent consideration, whenever there is a contingent consideration, and if in exam question the fair value is given on the date of acquisition, then include such fair value in PC. Whether that contingent consideration is probable, not probable, that is not at all relevant. If they have given fair value, thank you very much, correct. But if the fair value of contingent consideration is not given, then we'll just identify whether it is probable or not probable. Not probable. If it is not probable, then the fair value will be nil. If it is probable, then we'll calculate fair value as per the information given the question. If they will say 80% probable, so whatever is the amount of contingent consideration, we'll do 80% and then we'll find out a fair value of contingent consideration. Understood? Then calculate it. Understood? So in the given question, the fair value was not given. It was not probable and therefore we have taken fair value of contingent consideration as nil. Have you understood now? The contingent consideration, if you have understood, I will proceed. Bolo. Okay. This point have you understood? Then one more point was given. The point was the payment. Yeah. A Limited also agreed to pay one of the promoter shareholders or founder shareholders of B Limited a payment of rupees 15 lakh provided he stay with the company for 2 years after acquisition. So A Limited will pay 50 lakh provided he stay with the company. So just try to understand. First thing, it is not yet paid till now. It will pay if he stay. So it is deferred consideration. But can you say it become actually contingent if they remain in the company for 2 years? So it is payment in the capacity of what? Employee, and therefore not included in PC calculation. Not included in PC calculation. Understood now? Got this point? So point number B also I have explained. Point number A also I have explained. Any more doubt in these two questions? If you have understood, then write down, proceed, so that I can understand your feeling and I will proceed. Okay. I think apart from this, no doubt will come. If doubt is coming, it means you have some conceptual what lack. Means you have not understood the conceptual part. Okay. Any doubt in any concept, previous concept? If any doubt in the previous concept, that also you can ask me right now. Please revise point number. Please revise point number last. What you are saying here. Please revise point number. Which point number? Point number A. What you are saying? Prasanjit, I have not understood your doubt. You have mentioned, please revise point number A. Last. Last means what? Means once again I will explain this. Oh my god. Acquisition cost. So there was one acquisition cost also where that point was given. Acquisition cost. Acquisition cost is given where? Acquisition cost is given in this question. I think not given in the question. Na? Point number A, तो I have explained. How many times I will explain, Ray? You are not, you came late. I think so. You came late, and therefore you are asking. So once you came late, you are not supposed to ask me again. I will not revise bar barna. This point I explained in the last class. Again, I explain it right now. Then also you are asking me, what is this, Ray? Now acquisition cost means what? Any acquisition cost incurred by acquirer will be charged to profit and loss account as an expense immediately. That will not be included in the PC. Means what journal entry will do? Transaction cost account debit bank, and the transaction cost will be charged to profit and loss account. That is the simple journal entry. But in this question, there is no transaction cost. I don't think so. They have given a transaction cost. I don't know why you are asking that. Got this point? Once again, let me explain point number A. Otherwise, Prasanjit will become unhappy. What they have given? point number A, कि the payment will be higher of A and B. A is 35 lakh and B is what? 25% of any excess profit in the first year after acquisition over his profit in the preceding 1 year made by B Limited. Correct? So 25% of surplus profit, 25% of excess profit. Means you can see there can be three situations. 1, 2, 3. Either this will be 35, this will be 20, or this will be 35, this will be also 35, or this will be 35, this will be 45. Means just try to understand in all the three cases what is the payment need to be done. Okay, 35 lakh will be paid, because just try to understand in this case 35 lakh, in this case 35 lakh, in this case also 35 lakh, but there will be one excess payment of 10 lakh. So in the third case there can be a contingent payment, so this become deferred consideration and this 10 lakh become contingent consideration, which may arise if B is more than A. If B is more than A, it means, can I say, for point number there are two considerations. One is deferred. So deferred will be measured at present value. For that rate of discount is given. For that rate of discount is given. It is given that it is payable after how many years? It is after 2 years. So we'll do discounting for 2 year. Rate of discount is given. We can find out. Now it is given that B Limited has earned 10 lakh profit in the preceding year and expect to earn another 20 lakh. It means just try to understand 20 minus 10, it become 10, 25% will be only 2.5, which is less than what 35 lakh. Means, can I say contingent consideration is not probable. If the fair value of contingent consideration is not given, then we'll assume nil because it is not probable. And therefore, in this case, fair value of contingent consideration is assumed to be nil. Understood this part now? Now have you understood this part? Prasanjit. Okay. Understood? Now let me take one more question. Come to question number 42. Very good question. I like this question personally. Similar question, the draft balance sheet of Swan Limited and Duck Limited as at 31st March 2023 is as under. You can see they have given Swan Limited and Duck Limited. PP, they have given all this. You just read it. Correct? On 1st April 2023, Swan Limited acquired 80% equity shares of Duck Limited. Means 20% will be NCI. Swan Limited agreed to pay each shareholders of Duck Limited 20 per equity share in cash. So cash payment is there. And to issue 5 equity shares of rupees 10 each of Swan Limited in lieu of every 6 shares held by shareholders of Duck Limited. Means what is swap ratio of 5/6? The fair value of shares of Swan Limited is 100 per share on the date of acquisition, and they have given fair value also. Okay. Now, whenever you are reading the question now, always highlight what are the information which is relevant. You can see what I am doing. I am just highlighting all the information. I have written 5/6. Correct now. This is very important. What you do when you read the question, you don't highlight. And once you have understood it, but once you came to the end now, you'll forget whatever you have done. So once again, read the point. So you need to understand how to read the question. Normally you don't know how to read the question. You read it. Just try to understand. You have read para number 1 and para number 1 you have understood. But when you will come to the end, can I say you will forget about para number 1? Then once again you read it. And what happened in exam will take more time. So whatever you are reading, just highlight 80%, 20% is NCI. Correct now. So this is 20 rupees per equity shares. All thing you highlight, so that when you are coming again in point number 8, just read the highlighted point and you will be able to solve it. You will be able to solve it. Got this point? If you have understood this point, send me a message. Send me a message fast. Understood this point? Whatever I am saying, this is now I am doing this question. How to read it? How to read from examination point of view? Okay. And normally, what I have seen, the student don't read the balance sheet. Now, normally when you will not read the balance sheet, sometimes what happens, they will give some hidden information in the balance sheet. And suppose that hidden information you have not read, you will die in exam hall because entire solution you have done without going through that point. So can you say at the end you realize that that point you have missed and entire solution become what bakwas. Got this point? So what you should do? You should read the balance sheet very fast like this. PP like this, like this, like this. Means just find out is there any additional information? Yes, this is 10 is this is 100 is. Okay, 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 okay. Deferred tax liability is there. Okay, okay, okay. Like this. Understood? So just find out any hidden information in the balance sheet. There can be some hidden information in the balance sheet also. Trust me, that hidden information, if you have not read, and at the end, if you realize that there is some hidden information, can you say whatever solution you have done, gone case, killed. You are killed in exam hall. And trust me, if this question you are not able to attempt it, or this question you are taking more time, can I say surrender? In exam, you will surrender. Okay? Yes, sir. Then Swan Limited also agreed to pay an additional consideration being higher of same point. This is so I will say now this one I don't know why they give this point in exam. From my point of view, students are not able to do it in exam correctly. I don't understand why. This is the favorite point. Being higher of 90 lakh and 30% of any excess profit in the first year after acquisition over Duck Limited profit in the preceding 12 months made by Duck Limited. The additional amount will be due in 3 years. 3 year. Means it is payable after 3 years. Post date of acquisition, Duck Limited earned 30 lakh. In the preceding year, expect to earn 40 lakh. So once again, just try to understand. In this, A will be 90 lakh. B will be what? 30% of surplus profit. But because the contingent consideration is not given, will assume to be nil because it is not probable. So 90 lakh become deferred consideration. Understood? Have you understood? The fair value exercise in the property, the fair value PP is given an investment of Duck Limited on 1st April 2023 is 1200 and 1300. So what you should do? You should write down PP, how much fair value they have given 1200, write down in front of this. And for investment, they have given 300. Investment, how much? 300. So you can understand that for these two, they have given fair value. For other assets and liability, they have not given fair value. Okay, sir? Yes, sir. Duck Limited own a popular brand name that meet the recognition criteria of intangible asset under Ind AS 103. Independent valuer have attributed a fair value of 250 lakh for the brand. So 250 lakh, can you see this is the fair value and carrying amount is because it was not recognized in the balance of acquiring company? Yes, sir. So fair value, this is give star mark. This is super important. You can miss this information. However, the brand does not have any cost for tax purpose and no tax deduction are available for the same. And not no tax deduction are available for the same. It means can I say this information they are given for tax base and tax base become zero and the tax base become zero, the tax base is zero. So this information they are given for tax base, write down tax base zero because once you have understood, write down tax base is equal to zero. Understood? Yes, sir. Following is the statement of contingent liability of Duck Limited. Now, whenever contingent liability is given, so my question to you all, whether it will be recognized as provision, it will not be recognized provision. Let me read it. Particulars, fair value is given remark. Lawsuit filed by a customer for a claim of 20 lakh, fair value is 5 lakh. It is not probable that an outflow of resource embodying economic benefit will be required to settle the claim. Any amount means what they are saying it is not probable that means outflow of resources not probable. My question to all of you whether it can be recognized provision in the balance sheet of acquirer company, yes or no? Means whether you recognize this contingent liability of acquiring company as provision in the financial statement of acquirer on the date of acquisition. Bolo, fast. It is given it is not probable that an outflow of resource embodying economic benefit will be required to settle the claim. Means outflow of resource is not probable. Outflow of resource is not probable. Will you recognize it? Now just try to understand, those who are saying it is a contingent liability, 100% wrong. It is, even though it is not probable, if the fair value is given, recognize it as provision, means this will become provision. Just try to understand, we don't recognize contingent liability in the books of acquirer company. We disclose contingent liability. So I have said whether it will be recognized, it can be recognized only as provision. It cannot be recognized as contingent liability. Contingent liability is disclosed and provision is recognized. Understood? So yes, because fair value is given to recognize. So this para is totally given to confuse you. What Ind AS 103 says that will not apply Ind AS 37 for the initial recognition of liability. Correct? For that, Ind AS 37 is not applicable only when two conditions are satisfied. If there is a present obligation arising from past event and fair value can be estimated, we recognize that contingent liability as provision in the financial statement of acquirer company. Got this point? Yes, sir. Yes, sir. Then any amount which should be paid in respect of lawsuit will be tax deductible. So any amount paid means it will be tax deductible only when it is paid. Therefore, can I say tax base is equal to 0? Tax base is equal to 0. Then income tax demand of 70 lakh raised by tax authorities, tax limited, has challenged the demand in High Court. Means income tax demand, so this will be also recognized as a provision. It is not probable, they have not given. Now just try to understand, they have not given any information about tax base. Why they have not given any information about tax base? Because income tax payment is an item of permanent difference. Income tax paid is an item of permanent difference. Can you see, in this case we can assume one shortcut that tax base is equal to carrying amount. Therefore, if you apply tax base, you can say tax base is equal to carrying amount, and carrying amount will be the initial fair value, that is 20. So you can assume tax base is equal to 20, because can you see, it should be excluded from the deferred tax calculation because it is an item of permanent difference. It is an item of permanent difference. Have you understood this point? Have you understood this point? Bolo. One mistake, 0 marks. Means just try to understand. If you are not able to understand how to calculate fair value by name, it is a gone case. So each point is very important. Then Duck Limited has certain equity settled share-based payment award, which were replaced by new award. As per terms, original award, the vesting period is 5 years, and as of acquisition date, employee of Duck Limited have already served 2 years. As per new award, the vesting period has been reduced to 1 year. Vesting period has been reduced to 1 year, means it has been reduced to 1 year. Means how many year expired? 2 year plus 1 year. It means can replace vesting period is 3 year, because 2 year is already expired and the vesting period has been reduced to 1 year. From the remaining vesting period of 3 year, it has been reduced to what? 1 year. Therefore, can I say the replaced vesting period is 3 year. Understood this point? Original award 12 lakh, new award is 18 lakh. So what will be the amount included in PC? That will be the fair value of original award, multiply by expired period, divide by original vesting period, or replace vesting period, whichever is higher. So we'll take 5. So 12 into 2 divide by 5. How much? 4.8. So 4.8 will come. And how much related to post combination period? That will be 18 lakh minus 4.8 lakh. But can you see, this is not at all relevant? Therefore this is not required to be calculated, because post combination period accounting we are not doing. So even though you calculated, that is not at all relevant. That is not at all relevant. Understood? Further, Swan Limited has agreed to pay one of the founder shareholders of DAC Limited a sum of 15 lakh provided he stay. So can you say it will not be included in PC? It will not be included in PC. The acquisition cost, can you say this will be charged to profit and loss account? So what journal entry you do? Transaction cost account debit to bank or acquisition cost account to bank, but cash and bank will be reduced by 26 lakh. Be careful. Be careful. The applicable tax at 30%. Whenever they are given tax rate, it means you need to calculate deferred tax. Assume 10% discount rate, or discount rate is given for deferred consideration. Also assume, unless stated otherwise, all items have a fair value and tax base equal to their carrying amount at acquisition date. You are required to prepare consolidated balance sheet. Very good question, already asked in exam. What do you think? You can do it by your own or not? Very simple or not? Now just try to understand. If you are taking much time in this, means you are not conceptually clear or you have no writing practice. This type of question I will say super easy, because everything you know. Correct? Let me help you with the answer. So already I have. Here is the first we'll do working note number one calculation. This is step number one. Start with what working note number one. So cash payment is what? Cash payment is what? They have acquired 80% of equity shares. 80% of equity shares of how many shares? So can you see it is 900 divided by 100. So it means it is 9 lakhs equity shares. 9 lakhs equity shares. So first calculate number of equity shares. So how many shares acquired? It is 80% of 9 lakh, and cash payment per equity share is 20. So this is what cash payment 144 lakh. Then fair value of equity share issued 80% of 9. What is the swap ratio? 5 by 6. And what is the fair value of equity shares of? Fair value of equity shares of Swan Limited is 100. So it becomes 6 lakh equity share issued into 100 is equal to 600. Always I will suggest first calculate this bracket. This bracket means first find out how many number of equity shares to be issued. So 6 lakh equity shares will be issued at an issue price of 100. So this becomes 600. Means out of that, can you say 6 into 10 will be nominal value and 6 into 9 will be securities premium. So that will be transferred to securities premium in the balance sheet. Normally here also student do mistake. They write down 600 in the equity share capital. That is not at all correct. You just first find out how many equity shares to be issued and then multiply by fair value. Understood this point? Yes, sir. Then fair value of deferred consideration to 90 lakh. We need to find out present value at 10% for 3 years. In this you are champion. So this is 67.59. Then fair value of contingent consideration, already I have said it is 0. Already I have said it is 0. Then fair value replace SBP award attributable to pre-combination period. Already we calculated 4.8. This become what your PC calculation. PC calculation. Understood? चलेगा. Direct cost of acquisition, that is 26 lakh, will not be included in PC. It will recognize as an expense in PL on the date of acquisition. Already I have informed you. Additional payment of 15 lakh to the founder shareholders will not be included in PC, as it is a contingent payment in the capacity of employee, which will be forfeited if employee terminated. Correct? And can you say this amount is not yet paid because that is contingent right now. So not yet paid. If paid, it will become prepaid EB expense. Prepaid EB expense, but not yet paid. Not yet paid. Now working note number 2, calculation of fair value of INA and deferred tax. Step number 2. So you will just find out fair value and tax base. Correct. So can you say PP, fair value is given. Investment, fair value is given. But for other asset, if fair value is not given, then write down at carrying amount, add carrying amount, add carrying amount, add carrying amount. But be careful about those assets which is not given in the balance sheet, which is given as an additional information. That area you can do mistake. So there are two asset and liability. One is brand, one is provision. Be careful about that. Okay, is the brand fair value is 250 lakh given. Brand fair value is given 250 lakh. Yes, sir. And then long-term borrowing, carrying amount will take because fair value is not given. Long-term provision, short-term borrowing, then trade payable, correct. And provision for lawsuit and provision for income tax demand, that will be taken at fair value, recognize the fair value, that is 5 and 20 lakh. Understood? So fair value you can write down. Then tax base. Here is a tax base. They have already said that it is equal to carrying amount, and you can see there is no DTA, no DTL is given in the balance sheet of acquiring company. It means tax base and carrying amount is same. Therefore, this will be carrying amount, 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 this will be carrying amount. But for brand, because already it is given the information, and as per the information given, tax base is equal to 0. Understood? Correct. Then for this carrying amount, for this carrying amount, for this carrying amount, for this carrying amount, but for provision it is given information as per the information given. This is 0, but this is an item of permanent difference. Therefore, we have applied shortcut and we have assumed tax base is equal to carrying amount, means initial carrying amount. Initial carrying amount. Understood this point? Have you understood? So this become what? Total liability. Then we'll find out INA fair value and INA tax base. Then find out difference, because here fair value is more than tax base. This become 505 taxable temporary difference. On that we recognize DTL. The rate of tax is 30%. So we'll calculate 151.5 and we reduce it from fair value of INA. Therefore fair value of INA will become 1653.50. Have you understood working note number 2? Working note number 2, have you understood? Everyone, fast. Working note number 2, once you have understood. Now we'll calculate goodwill or gain or bargain purchase. So fair value of consideration paid 80%, already we calculate 20% is NCI. Now for NCI, they have not given any information about fair value method. So whenever information about fair value method is not given, we apply Pasina method. Pasina method means proportionate share in INA method. The value of NCI will be 20% of what? 20% of what? 20% of 1805 कि 20% of 1653 बताओ 20% of 1805 कि 20% of 1653 everyone. अरे नालायक 1805 how it will be 1805. I know there are some students who will do mistake and just try to understand. If you are not revising whatever I have done last class also I have informed you, then what is the use of the last class? Nalayak, already I am saying fair value of INA. This is the fair value of INA. So now DTL, after DTL will take fair value of INA. Then what is the use of doing this work together? Got this point? It will be 1653. Those who have said 1850, say sorry to me. Now this is the area where you can do mistake. I am here to identify where you can do mistake. And one mistake can a gone case, then your goodwill will not tally and you will not get marks. Understood? So it is not 1805, but most of you are saying correct. It is 1653.50. This is the total from this minus fair value of INA, and this will be gain on bargain purchase, which will be transferred to capital reserve. Then what is my suggestion? What is my suggestion? Normally you don't follow the suggestion. Yes or no? Batao. CA final student, what I have seen, they don't follow suggestion. They live in their own area. This is my actually understanding. They will never follow suggestion. Why? Because they are confused. Because they take suggestion from everyone. And at the end they are confused what to follow, what not to follow. Correct? Are you getting what I am saying? CA final student will never follow suggestion. Got this point? Why you don't follow suggestion? Because you are in YouTube. There are many faculty who is giving suggestion, and at the end you are confused. What to follow, what not to follow. Am I right or not? First reply, am I right or not? Okay. So what is my suggestion? That before preparing the balance sheet, just think about journal entry. If you know this journal entry now, then your balance sheet will always tally. It will take 1 minute extra, but it will save your 10 minutes. Because if the balance sheet not tallied, then ultimately you are wasting your time. So of course it will take you 1 minute, but trust me, your balance sheet will tally immediately. Okay? Correct? Are you getting what I am saying? Yes, sir. So first pass the journal entry. So what? INA. Here is INA before DTL was 1805. So write on INA because you can't write all assets and liability individually, you will die. It will waste your time. So this INA already calculated 1805. Write on INA account debit 1805 is the journal entry in the books of Acquire on the date of acquisition. Then to DTL 151.5, 151.5, 151.5. Then to NCA already we calculated Then to PC. PC is very important. Normally student do mistake here only. To cash payment how much? You know. To equity share capital nominal value you know. To securities premium you know. To deferred liability you know. And to SBP reserve you know. Correct. Now the difference of this journal entry will be gain on bargain purchase. If the same amount is coming, means can you say your entire working note is correct? If the same gain on bargain purchase coming as a balancing figure, your entire calculation is correct or not? Yes, sir, it is correct. Understood. Then there is one transaction cost. Don't miss it. So transaction cost or acquisition cost, whatever you want to write down. Acquisition cost account debit to cash or bank. This will be one more journal entry, or you can compound it also. Understood. This two journal entry, and now this journal entry need to be incorporated in the balance sheet. Means this you need to incorporate where? In this balance sheet. Means what will happen? Can you say PP increased by 1200? Can you say investment increased by 300? Correct. Inventory increased by 260. Correct. Trade receivable increased by 540. Then cash and cash equivalent increased by 290. But minus means minus. How much minus? There is one cash payment. How much cash payment? I think 144. And there is one more minus. How much? Transaction cost how much? I forgot batana re. Transaction cost was how much? It was 26. It was 26. So minus 26 you can calculate. Correct. Then other current asset is 350. Yes, sir. Then equity share capital 1200. I think it is 60. 60. Correct. This will not come. This will not come. Then other equity, you will say me. You will say me. Correct now. Other equity 1450. 420 plus 420 plus securities premium. How much securities premium? Securities premium how much batao? It is how much? How much? Securities premium how much? It is that is 540. Securities premium 540. And there is one SBP reserve how much? 4.8. 4.8. Yeah. Now whether I have done correct or there is some mistake in this. There is some mistake in this. Find out whether I have done correct or there is some mistake in this. Other equity I have done correct or there is some mistake in this. Don't see the solution, huh? Yes, case this will not come, and this is super dangerous. I don't understand why student add this. Reserve and surplus is never taken over. INA means what? Assets and liability. We don't take equity, share capital, reserve and surplus. Understood? So this will not come. But normally, just try to understand. Once you have done the journal entry, you will never do mistake. But there is a high chances that you may do this journal entry. Yes, when there is one acquisition cost, very good. Those who have said acquisition cost, it means that is also correct. So minus acquisition cost. What was the acquisition cost? 26 lakh. Good. Now it will tally. Now long-term borrowing 500 will come. Correct. And there is one finance. There is one deferred liability. What was the deferred liability? Because it's payable after 3 years. So that will be also non-current liability. What is your deferred liability? What is the amount? Deferred liability is 67.59. So 67.59 item. 67.59. Then long-term provision. Correct. Acha, there is one intangible asset, brand. Brand will also come. How much intangible asset? I think 250. Brand will also come 250. It can be also missed. Correct. Now be careful. Understood. Now long-term provision. So first 200 will come. Now the provision, whatever you have recognized extra provision, that can be considered a short-term provision because that is income tax lawsuit or whatever. So you can assume it is short-term provision, or you can also assume long-term provision as per your choice. As per your choice. Are you getting what I am saying? Now deferred tax liability we created. How much deferred tax liability we created? 151.5. 151.5. Write down 151.5. Correct. Then short-term borrowing will be 290. Then trade payable will be 370. And there is a provision. Provision you can write down short-term borrowing as short-term provision, or you can write down as a long-term provision, your choice. So if I write down short-term provision, So short term provision will be how much? What are the two provision we created? Provision amount is how much? What is the amount of provision? Amount of provision how much? It is 25. The amount of provision is 25. Understood? So plus 25 and your balance will tally. NCI you have missed. So non-controlling interest will come. That you write on non-controlling interest. It will be there. Yes or no? Correct. Oh, capital reserve. I only forget capital reserve. Chalo, that the end I would have seen the journal entry. So capital reserve is how much? Thank you very much. Capital reserve I only forgot. Capital reserve is how much? 506. So you can understand the importance of this journal entry. If I can miss, so you will definitely miss. Correct now. 506.41. So now just tally this has been taken, this has been taken, this has been taken, this has been taken. Cash you have already deducted. This has been taken, 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 this has been taken. Your balance will pakka tally. Understood? So this is my suggestion. Pass this one journal entry. It will take 1 minute extra, but trust me, your balance will tally. Now happy? Now happy? Now you can prepare the balance sheet. This is the balance sheet. You can just see notes to account. I will say notes to account. Only give for equity, share capital, and other equity. Balance notes to account. If the time permit, then only you prepare. Otherwise, I will say leave it. Just try to understand if you are not preparing notes to account, maximum they may deduct 1 mark or 2 marks. But in that time, if you can do a 10 marks question, that is more important. So if you have time to balance notes to account, otherwise I will say leave it. Otherwise I will say leave it. Most of the time they will never deduct marks. If you have time, only do this much. Correct? Understood the presentation part? I think with this question, when I have explained, you have understood where you can do mistake and how to avoid the mistake. Have you understood now? Bolo. I think you have only identified acquisition cost, you identified capital reserve, you identified. I'm happy that you are with me. चलेगा? चलो. So this question we have done. So it means we have done 3 questions. 2 questions you have done. 1 question I have done. So 3 questions we have done. Understood? चलेगा? Can you please explain provision? Previously held interest. Previously held interest treatment. Chalo, I will explain that previously held equity interest in one more question. Chalo, that time it will be clear. So I will not go to question number 44. I am going to take one more question about previously held equity interest. ठीक है? Provision वाला 2 means चलो. Now let us come to acquisition cost treatment. What you are asking, Ray? It is very simple. You are asking that point, which is very simple. The journal entry is what? Acquisition cost accountable to bank. The acquisition cost will be debited to PL. So your other equity means your PL will decrease, means your retained earning will decrease, or other equity decrease, and bank will reduce. That is the 2 effect. What is this? Provision wala 2 point. Arey, provision wala 2 point lawsuit. Lawsuit. I am not able to understand when I am explaining that time where you have gone. You are wasting my time, others' time also. Okay. Now, lawsuit filed by a customer for a claim of 20 lakh. What I said, simple word. Whenever fair value of contingent liability is given, it will be recognized as a provision. Hamesha, every time. Means whatever information has given, that is given to confuse you. Means this is provision to be recognized at 5 lakh, and this is a provision to recognize 20 lakh because the fair value of contingent liability is given. Now, in this question, it is given in this part lawsuit, any amount which would be paid in respect lawsuit will be deductible. Means it is tax deductible only when it is paid. It means right now it will not be recognized under income tax book. Therefore, the tax base will be 0. But for income tax demand, can you say income tax demand is an item of permanent difference because that is disallowed permanently. Therefore, for that already I have said either you exclude it from the calculation of deferred tax, or you assume the tax base is equal to initial carrying amount. So what is the initial carrying amount? 20 lakh. So you will assume 20 lakh. Understood now? Have you understood this? Chalo. Now let us come to the next point. Come to the next point. Correct. Now step acquisition. This is also one of the very important step acquisition. Now what Ind AS 103 says that whenever there is step acquisition, previously held equity interest will be remeasured at fair value. Previously held equity interest will be remeasured at fair value, and because of that remeasurement there can be gain or loss. That gain or loss means fair value minus carrying amount will be gain or loss. That gain or loss will be transferred to PL or OCI as the case may be. If there is a previously held equity interest, if it is measured at FBTPL, then gain or loss will be transferred to PL. If that was measured at FBTOCI, then gain or loss will be transferred to OCI. But if question is silent, always transfer the remeasurement gain or loss to PL. Remeasurement gain or loss to PL. Understood? Correct. Now, what they want to say, if suppose the previously, if there is a previously held equity interest is measured by using equity method, means suppose you have acquired 40% initially, so it was investment associate, correct now, and now once control is obtained, then equity method is discontinued. So whenever you discontinue equity method, then whatever OCI component you have recognized, OCI component you recognize under equity method, that will be what de-recognized. So can you say when you de-recognize OCI component in relation to the equity method, can you say that will be accounted as per respective Ind AS. Now we all know that OCR of two types, either it is recycled to PL or not recycled to PL. So if it is recycled to PL, it will be transferred to PL. If it is not recycled to PL, then it will be directly transferred return earning. So what they want to say? If a step acquisition result in discontinuation of the use of equity method, the entity shall account for all amount previously recognized in OCI in relation to that investment as under. Now, share of revaluation reserve. So can you say as per Ind AS 16, it will be directly transfer retained earning. So it will be transferred retained earning. Share of FCTR. FCTR means foreign currency translation reserve as per the requirement of Ind AS 21. It will be recycled to PL. So it will be recycled to PL. Share of FBTOC reserve debt instrument. So as per Ind AS 109, it will be recycled to PL. Share of FBTOC reserve equity instrument as per Ind AS 109, it will be transferred directly to retained earning. Share of remeasurement reserve as per Ind AS 19, if you remember, we have done it will be never recycled, so it will be transferred retained earning. Share of cash flow has reserve, that also we have done in Ind AS 109. Ind AS 109, correct? As per Ind AS 109, cash flow has reserve will be also recycled to PL. It will be recycled to PL. Only remember this, means this, right one doesn't, this revaluation reserve, FBTOC reserve equity instrument, and remeasure reserve, this will be always transferred to retained earning. Balance all will be recycled to PL. Only in exam they will ask this 6 point. They will not ask more than this. They will not ask more than this. So can you repeat with me? Everyone, this you memorize because this is very, very important point. Can be asked in MCQ question also. You will say, correct? So recycle to PL or transfer retained earning, correct? You will say, I am asking you FCTR, whether it will be recycled to PL or transfer retained earning. Everyone fast. FCTR. FCTR. Correct. Bolo fast. It will be recycled to PL. Very good. Then revaluation reserve. Revaluation reserve as per Ind AS 16. Retain earning. Very good. Then you will say me FBTOCI debt instrument, it will be PL. FBTOCI, equity instrument, it will be retained earning. Cash flow as reserve, it will be PL. And last, the remeasurement reserve as per Ind AS 19, it will retain earning. Only this much. Can you memorize this? This is to be memorized because this you can't apply concept in this. You can't apply logic in this. You need to memorize something. You need to memorize. So can you memorize this much? Bolo, have you understood? Okay. Any doubt? Very good. Excellent. I don't know whatever you are saying because my time and your time is there is some delay. So now I am not able to understand. You are writing peer returning, peer returning. I am also confused. Chalo. But I hope you have understood. Chalega. For this, there is one very beautiful question. Come to question number 17. Come to question number 17. That is also can be asked in MCQ, can be asked in what? Descriptive part. Question 17. This is the question. On 1st April 2016, company PQI acquired 30%, means significant influence of the voting ordinary shares of company XYZ Limited for rupees 8,000 crore. PQI Limited account for its investment in XYZ using equity method as prescribed under India's 20. I hope that you know Tora India's 28. Investment in associate and joint venture. At 31st March 2017, PQI recognized share of net asset changes by using equity method. Share of profit or loss. So what journal entry will do? They will do investment account debit to share in profit or loss, and that will be transferred to PL. So this will be transferred to PL. Then share of exchange difference OCI means FCTR. So they will pass one generally investment account debit to OCI and accumulated in FCTR. So this will be accumulated in FCTR. Then share of revaluation reserve. They will say investment account debit to OCI and accumulated in revaluation reserve. This will be accumulated in revaluation reserve. Understood? But can you say now what is the carrying amount of investment? Carrying amount of investment will be 8,000 plus 700 plus 100 plus 50. Means it become 8850 and that is given in the second next para 8850. Yes, sir. On 1st April 2017, PQ Limited acquired the remaining 70%. Means control is obtained 30% initially, now 70%. So it means they have acquired all the equity shares. So this becomes the date of acquisition on which date Ind AS 103 will be applicable and will apply step acquisition. What is the PC 25,000 crore? Fair value of 30% interest already owned is 9,000. Fair value of XYZ INA is 30,000. Understood? It means just try to understand. In this case, what is the remeasurement gain? So 9,000 minus 8850. So remeasurement gain is 9,000 minus 8850. So 150 is the remeasurement gain. That will be transferred to PR. That will be transferred to PR. So what will be the journal entry in this case? What will be journal entry? I will just explain. Can I explain with this? So can I say INA account debit 30,000? This information. Correct. Then this FCTR will be de-recognized and will be transferred to PL because this will be reclassified to PL. So FCTR account debit 100 and this were revaluation reserve that will be transfer retained earning. So this will be transfer retained earning. Correct? Understood? Correct. And how much cash paid? Cash paid is 25,000 credit to investment in associate. Means this is to cash to investment in associate carrying amount. Correct. Now retain earning will be how much? 50 because this will be transferred to 50 and 2 gain on previously held equity interest. 150 was the gain and FCT was 100. Ultimately gain become what? 250. This is the journal entry. Super easy. And the difference between this journal entry will be what? Goodwill. However, goodwill can be calculated as working note. Working note you can do. What is the working note? Batao. What is the purchase consideration? 25,000. What is the fair value of previously held equity interest? 9,000. The total become how much? It is 34,000. And what is the fair value of INA? 30,000. So automatically 4,000 is goodwill. This can be calculated as working note. Can you pass this journal entry? Have you understood this journal entry? Batao. If you have understood, then I will proceed. So you can see revaluation reserve will be transferred to return earning and FCTR will be transferred to PL. So total gain which will be transferred to PL, 150 was the remeasurement gain and 100 was the reclassification gain. So total gain how much become 250. Understood this point? This is one of the questions which can be asked in exam. Have you understood this or not? If you have understood, I'll proceed. Understood this part? This 25,000 will come in credit side. There is some typo mistake. Okay, sir. Yes, sir. Now, there is one more concept about measurement period. This is also very important. Measurement period. Now, let me explain measurement period. Do you know about measurement period? Or I need to explain fully? Do you know about measurement period? Now, let me explain. So, what this concept says, try to understand. Measurement period. Suppose this is the 31st March. This is the reporting date. And just before the reporting date on 15th March, there was a business combination. Now, whenever there is a business combination, it means we want the fair value of INA, we want the fair value of NCI, we want the fair value of previously held equity interest, and we want purchase consideration. And can I say for this we want measurement? Who will do the measurement? A valuer, expert, correct? And can I say they will take some time now? Means it is not possible that you have given them the job to value and they will do immediately. They will take some time. There may be many assets for that measurement is required. So it is not 1 day job or 2 day job. It will take some time. So what Ind AS 103 says that if the valuation report has not been received before approval of financial statement, so we can't delay the approval of financial statement. Therefore, Ind AS 103 has given one relaxation. Before approval of financial statement valuation report is not received, we can do business combination accounting, initial accounting for business combination on provisional basis. Means we'll take all information for which measurement is not completed at provisional amount, at a provisional amount, and based on that provisional amount, we'll calculate goodwill or gain on bargain purchase. And so this is known as provisional accounting. Then in this case, Ind AS 103 has given a maximum 1 year from the date of acquisition. Means they will give you maximum 1 year from the date of acquisition. Correct? This maximum 1 year is known as measurement period. Measurement period. And they say that during this measurement period, you should try to obtain the information. Try to obtain the information. So can you see during this period, you will obtain new information. New information of what? New information of the facts and circumstances which is existed on the date of acquisition. So there can be two type of information. You receive new information related to the facts and circumstances existed on the date of acquisition, or new information related to the facts and circumstances existed after the date of acquisition. Correct? Let me take one example. Suppose if I say there was one debtor of acquiring company, and debtor of acquiring company become insolvent before 15 March, but that information was received during measurement period. So can you say that become the facts and circumstances existed on the date of acquisition? Correct? But if suppose the debtor become insolvent after business combination date, means after 15 March, correct? So that is also new information, but that new information is for the new information related to facts and circumstances after the date of acquisition, existed after date of acquisition. My question to you all, which information is relevant for business combination accounting? So can this information is relevant for business combination accounting, and this information is not relevant for business combination accounting, therefore it will not be considered for business combination accounting. Can you see, this will be a subsequent information which will be accounted as per respective Ind AS but not as per Ind AS 103. Means if debtor become insolvent after the date of acquisition, apply Ind AS 109 for impairment loss, but Ind AS 103 will not be applicable now. But for this, consider for this any new information which are related to the facts and circumstances existed on date of acquisition is considered for business combination accounting. Correct. Now what Ind AS say that this will be adjusted on retrospective basis. Adjusted on retrospective basis. Retrospective basis means retrospective basis means what? Of course, this will be considered for calculation of goodwill or gain or bargain purchase. But on which date? On this date in the current financial year, because this financial statement, previous year financial statement is already approved. Once approved, it cannot be amended. Means whatever adjustment you will do in the current financial statement, but in the previous year figure. Because we are doing retrospective accounting, so you need to restate the previous year figure, restate the previous year figure for adjustment for the business combination accounting. It means, can I say, they can be either increase in the fair value of INA on the date of acquisition or decrease in the fair value of INA on the date of acquisition. So that adjustment is required. That adjustment is required. Understood? So that will be restated in previous year figure for business combination accounting in current year financial statement. Current year financial statement. Understood? Have you understood this point? Up to this, any doubt? Have you understood what is measurement period? Have you understood what is measurement period? Have you understood this much? Say yes or no. Now, just try to understand what Ind AS 103 say. The measurement period will complete once the new information is obtained or 1 year has been expired from the date of acquisition, whichever is earlier. Whichever is earlier. Means, can you say this will be the maximum measurement period? So this will be the end of measurement period. But they can be, just try to understand. Some information might be obtained after measurement period, which is related to the facts and circumstances existed on the date of acquisition, quite possible, then in that case it will be considered as an error, and then Ind AS 8 will be applicable, not Ind AS 103. Means any information about the facts and circumstances which has been received after the completion of measurement period, then it will be considered as an error, and then you need to apply Ind AS 8 for the correction of error. For the correction of error. Understood this point? Correct? Yes, sir. Got this mind. Now just try to understand. I'll take one example. Try to understand this. Try to understand this. Suppose on 28th Feb 2017, there was a patent whose fair value we have taken 1 crore. And by taking 1 crore, the goodwill was measured at 1.2 crore. Understood? Correct? Understood. And 31st 12, sorry, one minute. This will be 31st March. 31st March 2017 was the reporting date. Correct? Understood? Correct? Any doubt? And let's say useful life of the patent was 10 years. Useful life of the patent was 10 years. It means, can you say for 1 month already you calculated amortization for this in this financial year? So how much amortization you can see? 1 crore divided by 10 into 1 divided by 12. So that will come 83,333. Means this much amortization is already charged to profit and loss account. Up to this, any doubt? Means this is the provisional accounting. This is the provisional accounting. This is the provisional accounting. Now what happened during measurement period? You have been informed that the actual fair value of the patent was actually 1.5 crore. 1.5 crore. Understood? It means the patent should be increased by 50 lakh. Patent should be increased by 50 lakh. Are you getting what I am saying? Patent should be increased by 50 lakh. Understood? It means what will be the adjustment entry? Can you say adjustment entry will what? Patent will increase by 50 lakh. Can you say if INA will increase, your goodwill will decrease? So goodwill will decrease by 50 lakh. Understood this point? So patent will increase by 50 lakh and goodwill will decrease by 50 lakh. Understood this point? Have you understood this point? Correct. And can you say now we need to also charge some additional depreciation of 50 lakh for 1 month? Because last year we have only calculated depreciation of 1 crore. But if you have revised 1 crore to 1.5 crore, so we need to charge some additional depreciation of 50 lakh for 1 month. So we'll say 50 lakh divide by 10 into 1 divided by 12. So your depreciation will increase by 41,667. So you will pass one more journal entry. Depreciation account debit, sorry, amortization account debit to patent. So amortization account debit to patent this much. Correct. And this will be adjusted in the previous year figure of current year financial statement. This will be adjusted in previous year figure of current year financial statement. Have you understood this part? Bolo. Have you understood this part? So this is known as adjustment entry for measurement period. For measurement period. Understood? Got this point? There are two situations. Now just try to understand. If NCI is measured by using fair value method, if NCI is measured by using fair value method, then any increase in INA or decrease in INA will not affect NCI. Will not affect NCI. So assuming NCI is measured by using fair value method, but just try to understand. If NCI is measured by using Pasina method, so if you are increasing INA, so NCI will also increase. NCI will also increase now. So in that case, your journal entry will change. Just try to understand. In that case, if suppose NCI is measured by using Pasina method, then what you will do? A, patent will increase by 50 lakh. Correct? To NCI. Suppose NCI is 20%. You can say NCI will increase by 20% of 50 lakh. Then 20% of 50 lakh will be 10 lakh. And then goodwill will decrease by 40 lakh. Understood this point? Have you understood this point? Very important. So you need to just find out whether NCI is measured by using Pasina method or fair value method. If it is fair value method, then NCI will not be affected. But if it is Pasina method, NCI will be also affected. Have you understood this particular point? Very important from examination point of view. Very important. I am expecting one question on this and 100% high chances they may ask a question on this. Have you understood this or not? Then second journal entry will remain same because amortization to patent will be 41,667. Correct. So this will be restated in previous year figure of current year financial statement. This will be restated in previous year figure of current year. Current year means this year. Current year means this year. Okay, sir. Chalega. Have you understood this point? The many students are messaging me, sir, I have not attended your class, sir. What we can do? This is a crash batch. Can you give it free? Just try to. This is not a crash batch. This is not a revision batch. I'm not taking any revision batch. Revision and crash and marathon. This is not a crash batch. This is not a marathon batch. This is not a revision batch. This is a practice batch. I'm covering all the points. Trust me. Correct now. I am covering all the points. This is not a marathon batch. My marathon batch is already free in YouTube. Correct? Already. And in marathon batch, we don't go in detail. This much detail is impossible. So I am considering each and every point. Any point which is important from examination point should be considered. Should be considered in this practice batch. And I am covering all the question also. Trust me, I am taking each and every question, whatever is relevant from examination point of view. Okay, sir. Any doubt in this? So I would like to take one question. Come to question 41. This question is very interesting, but there is one error in the question. There is one error in the question. Let me inform you about that error. Come to question number 41. I don't know whether that question will come or not, but this is a good question. Question 41 na, is such a big question. Na. How many pages are there? Question number 41. I think this only 40. Question 41. I like this question personally, but there is one error in the question. Mini Limited is a manufacturing entity in the textile industry. Mini Limited decided to reduce the cost of manufacturing by setting up its own power plant for their captive consumption. As per the market research report, there was non-operation power plant in nearby area. Hence, he decided to acquire the power plant, which was having a capacity of this much megawatt, along with all entire labor force. Just try to understand. Whenever you acquire all assets and liability with labor force, it is a indication that it is a business combination. I have not done the analysis of business. Correct now. We will do. But whenever they say we have acquired all assets with labor force or skilled workforce, it means it indicates it is a business. It is not an asset acquisition. Whenever we say we acquired all assets without acquiring any skilled workforce, it means it is an indication that it can be an asset acquisition. Understood? So whenever they say with labor force, it means it is a business. It means it is a business. Okay. This power entity was owned by another entity, Max Limited. Mini Limited approached Max Limited for acquisition of power plant at the following terms. Mini Limited will seek an independent valuation for determining fair value. Value of non-current asset acquired and non-current financial liability assumed. So non-current asset was acquired at this amount. Non-current financial liability was acquired. This is the fair value given. Consideration agreed to 51 PC is given. Both the party agree to terms and enter into an agreement on 1st April 2001. So can I say agreement was entered on 1st April? Means from this it is understood this become date of acquisition. This become date of acquisition. Correct? But from my point of view, here there is one error. Here only there is one error. What is error? I will explain with immediate effect. Due to unavoidable circumstances, valuation could not be completed by the time Max Limited finalized its financial statement for the year ended 31st March 2001. Just try to understand. 31st March 2001. So this is to 1st April. If the date of acquisition is 1st April 2001, this is not a transaction of this year. This is a transaction of next year, na? Are you able to understand? Try to understand what they want to say. This is the year end. 31st March 2001 is the year end. So this is the year end. So can you say date of approval will be this? Correct. And if the date of acquisition is 1st April 2001, my question to you all, if the date of acquisition is 1st April 2001, this is a transaction related to 001 or 0102. Are you getting what I am saying? So this is a transaction related to 0001 or 0102. You only say this transaction related to 0102. So why you are saying that financial statement is not approved? Actually, in this question, from my point of view, the date of acquisition should be 31st March, and then only measurement period concept will come. Measurement period concept will come only when the date of acquisition 31st March. If the date of acquisition 1st April, then the measurement period will not come only because 1 year. If this is the date of acquisition, then 1 year will be this financial year only. Are you able to understand what I am saying? Are you able to understand what is the mistake in the question? Mistake in the question is what? This from my point of view, this will be 31st March 2001, but they have given 1st April 2001. Have you understood this point? Have you understood this point? Understood. Very good. Excellent. Then Max Limited annual financial statement record a fair value of 80 megawatt power plant is 46.90 million with remaining useful life for 40 years. So it means they have taken this fair value. Max Limited also has a license to operate that power plant unrecorded in the books. So there was a license which was unrecorded, will be recognized. As on 31st March, देखो as on 31st March 2001, अरे नालायक, in the date of acquisition 1st April 2001, why you are giving fair value as on 31st March? अरे you should give fair value, means there is some error in the question only. Got this point? It has a fair value of 5 million. 6 months after acquisition date, Mini Limited received an independent valuation which estimated the fair value is this. So this become measurement period wala concept. Understood? So this will be now adjusted on a retrospective basis. Adjusted on a retrospective basis. CFO of Mini Limited want you to for the following: determine whether transaction should be accounted as asset acquisition or business combination. So of course it is a business combination. In this you should write down the meaning of business, that I will do at the end. And there are sub point. If you write down that much, you'll get the mark. Get the marks. So what you should write down? What you should not write down, I will explain when I will do business definition. Till now I have not done the business definition. Then calculate goodwill or gain or bargain purchase. Can is very easy. Correct. So in this case, goodwill or gain or bargain purchase, I will explain with this. PC is given. Fair value of PP, provisional amount, it is given. Fair value of other current asset given. Fair value of intangible asset is given. Fair value of non-current financial liability is given. This becomes fair value of INA. This minus this is goodwill. Goodwill you can easily calculate. There are only four asset and liabilities given. Understood. Goodwill is very easy. So you can calculate that. Then pass journal entry. Journal entry super easy. Arey bhai, super easy. Can you say power plant account debit? Then this is, I think you don't write down fair value. You can have non-current, whatever is given. Non-current asset is 11.10. Then license means intangible asset is 5 million, sorry, million, not crore, 5 million. Then goodwill is 20 million. Two liability, non-current financial liability 32, and bank PC paid 51. Super easy. Now this journal entry you need to give effect in this balance sheet. You can prepare balance sheet. Only 5 adjustment is required. Super easy. So they have asked balance sheet. Balance sheet also you can prepare. Means A, B, C, so you can do. With this question will come of 14 marks. Can you say super easy? A, B, C super easy. Only I need to explain D. Means I am doing this question for D. Determine whether any adjustment required in case valuation received subsequent to acquisition. If he has passed necessary journal entry in the books of Mini Limited. Not right to understand. Now, if I say date of acquisition is 1/4, that is not correct. But date of acquisition should be 31st March only. Now, if the date of acquisition is 31st March, so can you say we need to increase the power plant account debit? How much increase? You will say how much increase? So we have taken, how much we have taken? Initially we have taken what amount? Where is the amount? 46.9. 46.9. Then what is the actual value? 54.9. So 54.9. It become 8. It means, can I say it will increase by 8? It increase by 8. And will it decrease goodwill? Was only this much. My question to you all, whether any depreciation effect will come? Whether any depreciation effect will come? Because this date of acquisition, if I assume it is 31st March, I will say there is a wrong printing. Are you getting what I am saying? And if the date of acquisition 1/4, there is no concept of measurement period, then the measurement period wala point will not come now, because you are receiving the information before approval of financial statement. Then what is the use of measurement period wala point? So date of acquisition should be 31st March only. My question to you all, whether you will do any depreciation journal entry for the measurement period for previous year, yes or no? No depreciation. Very good. I also say that only. But what they have done, because this was actually received, measurement premise, the information was received. The information was received on which date? The information was received 6 months. So what they have done, I don't know how they have done, why they have done. They have done 6 month depreciation. So if in exam the same to same question come with 1/4, date of acquisition. You also do this depreciation bakwas journal entry. Understood? So that much bakwas can you do in exam? If suppose same to same question come, if they rectify, means if 1-4 has been changed to 31st March, then don't do depreciation journal entry. It means they have also understood their mistake. But if they have given this same question, then do this depreciation journal entry in exam. Can you do this bakwas in exam? Can you do this bakwas in exam? Bolo yes or no? Yes, sir. Yes, sir. And just try to understand this much. You are not supposed to write down. Only write down one para for measurement period. That adjustment is required on a retrospective basis. Correct? Not only that much. This much if you write, you will also die. I will also die, and the examiner will also die. Chalega? Understood? Good question or not? But this type of questions should be asked in exam. Trust me, this is easy question but conceptual. If anyone is lack of concept, they will not be able to do it. Am I right or not? Measurement period also completed. You can see measurement period is completed. Just read this entire thing. If you read now, everything is given detail. You will be able to understand. Now reverse acquisition will take reverse acquisition after break. Can we take a small break if you permit? We'll take a break. Hello, hello. Now, everyone, are you all ready? Are you all ready? Can we start once again? Yes, sir. Do you want me to take one more question for formation of subsidiary and measurement period? Do you want me to take one more question because one doubt came? So why we are not taking the measurement period value 54.9 instead of 46.9? Why we have not taken? Because that information was received after approval of financial statement. So can I say whatever information received after approval of financial statement that cannot be adjusted now? Got this point? बोलो. चलो we'll take one more question with measurement period, and in that more points will be covered, and I like that question personally. Come to question number, we'll take question number 25. Question number 25. Very good question. H Limited acquired equity shares of S Limited. Take short question. Now, like in this chapter, short question will not come. Big question will only come. A listed company in two tranches, means two part, as mentioned in below table. You can see 1st November they have acquired 15%, and 1st January they have acquired 45%. It becomes 60%. One thing is clear, this is a question of step acquisition. Both the above mentioned company have an INR as their functional currency. Consequently, S Limited acquired control of S Limited on 1st Jan. So this becomes the date of acquisition. Following is the balance sheet of S Limited. So they have given only the balance sheet of S Limited with carrying value and fair value. The fair value is given. You can see PP, everything is given. You can see they have given cash held in functional currency. They have given carrying amount and fair value. Okay, this information is totally bakwas because cash will not be acquired at fair value. It will be acquired at carrying amount only because cash cannot have fair value. Understood? Here you can do one mistake. Then they have given non-current asset held for sale. Once again they have given carrying amount and fair value. But can you say S limited would have been already applied in DS 105? Means this is carrying amount or fair value less cost of disposal, whichever lower. So we'll take carrying amount. This information once again not relevant. This information once again not relevant. Then they have given, you can just read it. Yes sir. Chalega. Then other information following is the statement of contingent. Similar point, whatever we have done in the previous question, same point is given. Lawsuit filed, fair value is given, and the tax base for this will be 0. I'm not repeating this point. Income tax 2 crore, this will be recognized at fair value, and the tax base will be 2 crore. Understood? In relation to the above mentioned contingent liability, S Limited given indemnification undertaking to H Limited to a maximum 1 crore. Means indemnification has been given for a maximum 1 crore. 1 crore represents the acquisition date fair value, means the fair value of indemnification asset is given. And you can see this fair value is actually less than 2.5 crore. It means indemnification asset will recognize that fair value only. Yes, sir. Okay, this point have you understood? Any amount which you receive in respect of above undertaking shall not be taxable. You can see if it is not taxable, it is also an item of permanent difference. If it is an item of permanent difference, the tax base will be equal to initial carrying amount, that is 1 crore. Chalega. The tax base of assets and liability of S Limited is equal to their respective carrying value being recognized in the balance sheet. The tax base of all other assets and liability which is given the balance sheet will be at carrying amount. Thank you very much. Carrying value of non-current asset held for sale 4 crore represent favorably less cost to sale. Thank you very much. This was understood point. Then in consideration of additional stake purchased by H Limited on 1st Jan 2027, it has issued to the selling shareholders 1 equity shares for every 2 shares held. 1 by 2 is swap ratio. In H Limited, fair value of equity shares of H Limited on 1st Jan is 10,000 per share. So they have given PC information. So this is the fair value of equity shares issued. On 1st Jan 2017, H Limited paid 50 crore in cash to the selling shareholder. So 50 crore is what? Cash payment. Additionally, on 31st March 2019, means after 31st March 2019, means it is for deferred payment. H Limited will pay 30 crore to the selling shareholders of H Limited if return on equity for the year ended 31st March 2019 is more than 25% per annum. You can say there is a contingency. It will become contingent consideration. S Limited has estimated a fair value of obligation as on 1st Jan 2017 and 31st March 2017 is 2223. So okay, this is the fair value of the date of acquisition. So this will be recognized initially on the date of acquisition as 22 crore. And can you see because this amount is payable in cash, this will be classified as financial liability and financial liability will be remeasured at FBTPL, will be measured at FBTPL. So this 23 crore means on reporting date it will become 23 crore. There is an increase in liability. This 1 crore will be transferred to profit and loss account. The change in the fair value of obligation is attributed to change in the facts and circumstances after acquisition date. Means what they are saying, whatever change that is related to facts and circumstances after acquisition date means that will not be adjusted due to measurement period wala concept. Understood? Then they have given quoted price. Is the voice okay, audible or not? Is the voice audible? Everyone just inform me voice. Just inform me voice audio is okay or not. What happened in the between? Something happened? Now everything is okay now. Now they have given quoted price of equity shares of S Limited on various date. As on November 2016, 350. Can you see this is not relevant? Means this is the market price of shares of S Limited. As on 1st Jan, this is relevant. As on 31st March, this is not relevant. This 395 can you see will be used for measurement of NCI if that is measured at fair value method, and measurement of fair value of previously held equity interest. So for that this is relevant, but this two information is not at all relevant. Chalega. On 31st May 2017, X Limited learned that certain customer relationship existing on 1st Jan 2017 on 31st May, means this is after acquisition date. Everything is okay or not? Chalo, 1 minute. Give me 1 minute. Now just see everything is fine or not. Means it was from the beginning or it happened after break. Now just see I have changed the mic, whether the same issue is coming or now it is everything is fine. Now everything is fine or not, let me know because I have changed the mic. Chalo, I will explain this point again. Okay. That is fine. What is given? Quoted price of equity shares of S Limited on various date is as follow. So they have given the market price of S Limited. as on November 2016, 350 per share. It means, can I say the the previously held equity shares was acquired at rupees 350? Means how many shares were acquired? Just check. It was 15%. 15% of how many equity shares? So if you see, it was 12. This was 12 crore divided by 100. Means can I say 15% of this 12 crore divided by 100 has been acquired at this price. But can I say this is to find out a carrying amount of previously held equity interest. This is to find out carrying amount of previously held equity interest. Okay. But can I say on 1st Jan 2017, this is required to find out fair value of previously held equity interest, and if NCI is measured fair value method, then that is also required by that is also will be calculated by taking this price. But as on 31st March 2017, this is not at all relevant. Not at all relevant. Then on 31st May 2017 means can I say during measurement period, because the date of acquisition was 1st Jan. So after reporting date, correct now. So this is the concept of measurement period. X Limited learned that certain customer relationship existed on 1st Jan 2017, means existed on the date of acquisition, which meet the recognition criteria of intangible asset, means it is an intangible asset. As on that date, we are not considered during the accounting for business combination for the year ended 31st March 2017. The fair value of such customer relationship on 1st Jan 2017 was 3.5 crore. Assume that there was no temporary difference associated with the customer relationship, means there is no need to adjust any deferred tax asset or deferred tax liability. On 31st May itself, H Limited further learned that due to additional customer relationship being developed during the period from 1st Jan to 31st March, the fair value of such customer relationship has increased from 3.5 to 4 crore. Let's see what to do about this. On 31st December 2017, H Limited has established that it has obtained all the information necessary for accounting of business combination, and more information is not obtainable. It means, can I say here the measurement period will be completed. So this para is related to measurement period. H Limited and S Limited are not related party and follow Ind AS for financial reporting. Income tax rate is applicable 30%. This is for DTA and DTL. You are required to provide your detailed response. What should be the goodwill or gain on bargain purchase in the financial statement? For that purpose, measure NCI by using proportionate share in fair value INA, means NCI is measured by using Pasina method, not by fair value method. Will the amount of NCI goodwill or bargain gain purchase so recognized above changes subsequent to 31st March? Of course, it will change because of measurement period concept. If yes, provide relevant geometry. What should be the accounting treatment of contingent consideration as on 31st March? So can I say it will increase from 20 to 23, and that 1 lakh 1 crore will be 1 crore na? That all figures are given crore, so that will be transferred to profit and loss account. So C is very easy. Can I say we are here to do A and B? Good question or not? If these questions come, the first the length of the question. And trust me, suppose this question come with the balance sheet of H Limited into previous CBS also. Correct now? But they have not given the balance sheet of H Limited, means CBS is not required. Good question or not? Super question covering almost all the point. Covering almost all the point. But how is the level of question? How you find the question? Good question or not? Till now, this question has not been asked in exam. A similar question means whatever question we have done previously, it was some point has been taken from this question and they have created new question exam. Means Swan Limited, Duck Limited, whatever we have done, that was actually derived from this question only in exam. Now, is the voice clear? Audible now? By seeing itself gone, sir, mean good question. Now let us come to the solution. Okay. Now, first can I say we'll calculate goodwill or gain or bargain purchase. For that, first can I say first we need to calculate PC. So PC will be what? First we need to calculate calculation of PC. So PC will be fair value of equity shares issued. So fair value of equity shares issued. Now, how many shares acquired On 1st Jan 2000, 1st Jan, can you say 45% was acquired? Of how many equity shares? Of how many equity shares? If you see, equity shares were how much? So that were 2 crore equity shares, 2 crore equity shares, sorry, 12 crore equity share divided by 100. It means can you say it is 0.12 crore, so we'll do all measurement. Understood? So 12 crore divided by 100 means become 0.12 crore equity shares. 0.12 crore equity shares. So how many shares acquired? How many shares acquired? Can you say 45% on the date of acquisition? Because you will calculate PC for the on the date of acquisition for 45% share acquired. 45% shares acquired. Got this point? It means on the date of acquisition, can you say it will be 45% of 0.12? What is the swap ratio? Already we know 1 by 2. And what is the fair value of equity shares of acquire company? That is 10,000 given the question. So if you see this become the number of share to be issued, multiply by 10,000. So this become 270. This become 270. Okay. Understood this part? Yes, sir. Cash payment is given 50 crore and the fair value of contingent consideration given 22 crore. So this become PC. PC understood? PC any doubt? Explain fast. Reply fast whether working note number 1 is clear or not. Now let us come to working note number 2. Calculation of fair value of INA and deferred tax. Same working note. So can I say fair value of PP? This fair value is given in the question. So PP, intangible asset, investment, inventory, trade receivables. Cash and cash equivalent will be taken at carrying amount. Non-current asset held for sale will be taken at carrying amount. Just identify the asset which is not given in the balance sheet. So there is one asset, indemnification asset, that will be taken at fair value. So this is dangerous. Sometimes we'll forget. So always whenever you are finding fair value of INA, just read the additional information. There may be some additional asset, additional liability. Now we'll take liability. Liability given the balance sheet. This all will take. Correct. Now there are two provision. The provision as per additional information taken, this become the fair value liability. It is already given the tax base is equal to carrying amount. So this all are carrying amount, carrying amount, carrying amount, carrying amount, carrying amount, carrying amount, carrying amount. But indemnification asset already we have assumed tax base is equal to initial fair value, that is 1 crore. Then this also carrying amount, carrying amount, carrying amount, carrying amount. But for these tax based information has been given. So we'll find out INA 461.50. Then tax base 152. So tax, you can see fair value is more than tax base. So this become taxable temporary difference. On that DTL can be recognized and this will become fair value of INA on the date of acquisition. Very easy. Correct? Any doubt? Understood? Correct? Any doubt in this? Some reasoning is given that already I have explained. Understood? Then can I say one more working note is required if they ask you to prepare CBS. One is calculation of remeasurement gain or loss on previously held equity interest. We need to also find out remeasurement gain or loss. So can I say fair value on the date of acquisition is 7.11. Fair value on the date of acquisition is 7.11. How you have calculated this? How you have calculated this? That we need to understand. Correct now. Means what I am saying, you need to find out what is the fair value of previously held equity interest. Previously held equity interest. So can you see it is 15% of 0.12 multiply by the fair value how much given. Check karo. How much fair value has been given on the date of acquisition, that is 395. So you will do multiply by 395. So you have done multiply by 395. So 395, how much it is coming? So it is 0.12 into 15% into 395. It is coming 7.11. Then you will find out carrying amount. Carrying amount will be as per the fair value whatever has been given on the date when they purchase it. So they have given 350. Correct now. So this is 15% of 0.12. So they have acquired a 6.30. So remeasurement gain which will be transferred to PL will be 0.81. Will be 0.81. Understood this part? With this, I am just explaining about remeasurement gain and loss. However, they have not asked you to do this because they have asked you to only calculate what goodwill or gain on bargain purchase. Understood? Now, just try to understand everyone. In the books of parent company, it was initially recorded it was 6.30, but now you have taken fair value this much, and because of that reason, can you say there will be one taxable temporary difference in the books of parent company? In the books of parent company, yes or no? So because of this remeasurement gain, there will be one taxable temporary difference in the books of parent company that is amounting to rupees what? 0.81. So can I say parent company will also calculate one DTL? So DTL will be 0.243. 0.243. So can you say in the books of parent company for this DTL will pass one journal entry PL account debit DTL, means this will be adjusted with PL. This will be adjusted with the PL of parent company. PL of parent company. It will not be adjusted with goodwill or gain on bargain purchase. Understood this point? Very important. I will say super point. Have you understood this part? So can I say this is taxable temporary difference because of remeasurement of asset in the books of parent company. This is not INA of acquiring company. This is not INA of acquiring company. Understood this part? However, this was not relevant. But then also I have explained you. Have you understood? Suppose they ask CBS to we need to also calculate this remeasurement gain. This remeasurement gain will be transferred to PL. And also we need to calculate one DTL. This DTL will be also transferred to PL. Understood this point? Have you understood this working note? So this one is special point, and already they have asked one question. I think in consolidation chapter with step acquisition where they have given, I don't remember it is consolidation or business combination. I forgot where this was one point. I think it was the question of business combination where it was this point. Correct now, and that is question of 44. I don't remember, but similar point they have already asked in exam. Have you understood this part? Have you understood this part? Yes, sir. Now let us come to what? The goodwill. So can I say fair value of equity share issued already we fair value of consideration paid already we have calculated 340 lakh. Fair value of previously held equity interest already we calculated. Fair value of NCI will be measured by using Pasina method, means 40% of fair value of INA that you can find out. This become total from this minus fair value of INA. This will be goodwill. Goodwill you have calculated. Chalega. Understood. Now, if they are CBS, because they have not given the balance sheet, you will prepare one journal entry. If you know the journal entry, you can do. Can you do prepare the journal entry by row? So I will only help. Can you say INA without DTL was 46.461.50? Then there was a DTL of what? One is 92.85 and one is 0.243 for that remeasurement gain. So this will be what DTL. Understood? Can you say investment in associate will be de-recognized at carrying amount? Investment in not in associate, investment in other entity will be de-recognized at 6.30 carrying amount. Then remeasurement gain will be transferred to PL 0.81. 0.81. Understood this point? Correct. Then to NCI as per our calculation. Then to equity share capital plus securities premium, because they have not given the nominal value of parent company equity shares. So I am adding equity share capital plus securities premium together. Then cash and bank payment, cash cash payment. Then there is one provision for contingent consideration 22 lakh. Provision for contingent consideration 22 lakh. Goodwill as per our calculation, and there is one DT expense which is nothing but due to remeasurement gain that will be transferred to PL account. So, or you can say retained earning debited. So retained earning account debited will be 0.243. Have you understood this journal entry? Have you understood this journal entry? Bolo. Now, if you know this journal entry, can I say you can prepare the balance sheet by your own? If you know this journal entry, can I say you can prepare the balance sheet by your own? Have you understood? This is the last question. Don't worry. Today I will not take much. This is the last question. Okay, sir? Okay. Understood. Then let us come to the measurement period. In the measurement period, they have given one information about customer relationship. Customer relationship will be recognized because that was not recognized in initial accounting. So this all information is given about measurement period that you can write down in your own word. So what journal entry will do? Customer relationship intangible asset, and because customer relationship will come 3.5 crore, 3.5 crore. Okay. Now just see everything is okay. Okay. Now you'll find everything okay. So what I am saying, we need to recognize customer relationship at fair value on the date of acquisition, that is given 3.5 crore. Now because NCI is measured by using Pasina method, can you say that will be also affected? NCI is 40%, so will increase NCI by 40% of 3.5, that is 1.4 crore, and the difference will be adjusted in goodwill. The goodwill will decrease by 2.10. Have you understood this particular point? This particular point? Now, can you say we need to also adjust the amortization on intangible asset because the date of acquisition was 1/1, so from 1/1 to 31st March, but the useful life of this intangible asset is not given. So we can assume it has indefinite life, and therefore we have ignored amortization because the useful life has not been given. So amortization of customer relationship for 3 months is ignored due to lack of information. Now, one more point has been given in the question that if from 1/1 to 31st March, it has increased from 3.5 to 4 crore. Means there was increase. So just try to understand one thing. Whatever increase in the customer relationship, that is because of self-generated customer, that cannot be recognized as an intangible asset. That cannot be recognized as an intangible asset. Even though we have opted for revaluation model. Because can you say if new customer has came, that is self-generated customer, so that cannot be recognized as an intangible asset. So the increase in the fair value of customer relationship after 1/1/2017 shall not be recognized as it due to self-generated intangible asset. I hope these 3 points you have understood. Correct. Now the last point, contingent consideration has been classified as financial liability and will be subsequently measured FBTPL. Therefore, one increase in the fair value of contingent consideration from 22 crore to 23 crore will be also recognized. Will pass one journal entry fair value loss transfer to PL to provision for contingent consideration of 1 crore, and that will be debited. Means this journal entry will do on 31st March 2017. But this journal entry will be done in the next financial year and will be adjusted on a retrospective basis. On a retrospective basis. Understood? Have you understood? Now all points you have understood or not, just let me know. Today we'll do this much only. Correct? I will not go beyond this. But have you understood this much or not? This question is super. Means I like this question personally. Once again, do it by row. Once again, this question you are supposed to do it by rote. Okay. Now write down some question for your practice. Okay. Write down some question for your practice. Why we account in detail of, just try to understand remeasurement gain. So that remeasurement gain means there was some changes in the investment because of the fair value, but that is not in the income tax book. So that means you have increased the carrying amount to fair value, but the tax base will remain same. So that will result in taxable temporary difference in the books of parent company. On that also DTL will recognize. So what journal entry will do? DTA expense in the books of parent company to what? TTL, so that will be debited to PL of parent company. Understood? Have you understood this point? Do this question by your own once without seeing the solution. If you can do it absolutely correct, then it means you have understood all the point. Now write down some question which will be done by you, which is required to be done by you. Correct? Question number 8, do by your own. Question 9, do by your own. This 9 I am expecting, this can be asked in exam. Question 9. Question 10, do by your own. This is for deferred tax calculation. Now you can do it. This is 18 you do by own, because same question, very simple question, but the same question was already asked in exam. Twenty-two already you have done. If not, then do it by your own. 24 also you just do it by your own, because this was one of the favorite question initially, but now they are not asking this question. You can see RTP exam, IBS, in IBS also they have asked, but very simple, you can do it by your own. My help is not required. 25 already we have done today, but you do it by your own once again. Thirty-six for your self practice, you can do similar question already we have done. This question is must do. I think now you will be able to understand. If you are not able to understand, then I will do this question on your behalf. हाँ, step acquisition के question में, yes, you need to calculate DTL for remeasurement gain if they have given tax rate. If they have not given tax rate, then ignore it. 42 also we have done. This question also you can do now by your own. 43 you try by your own. I hope now you will be able to do it. Okay. And this is also, I from my point of view, expected. Good question. Can be asked in exam. Expected. 43. 44 already I have asked you to do it. I think you have done it by your own. If not done, once again do it. This is one newly inserted question. I think you don't require my help in this. Yes, you don't require. You just do it by your own. I will not do it by because it is very simple. Yes, I think it is very simple. You can do it. Okay. This newly inserted question 45. It was in MTP Jan 2026. To do it by your own. Okay. चलेगा. So only what are left? Reverse acquisition is left. In that we have only two questions. So that two question I will do. Then business combination under common control. Only one question we have. That one question I will do. And then demerger, we have two questions. So we'll do that two questions. So this only I will say only one class is left and we'll be able to do it. Okay, sir. So today I will do this much only. I hope whatever we have done today, we have done more questions today and less concept. I think revision हो गया. Okay, sir. Okay. Any doubt? बोलो. If you have any query, you can ask me. Right now, I'm with you. Have you understood all the points? Are you enjoying everything? Are you liking the classes? Whatever concept we have done, is there value addition? Today for business combination, trust me, we have taken almost 5 hours and I have dedicated 11 hours. But trust me, in 5 hours, we have completed many things. Are you able to understand? Means, have you understood something extra? Because just try to regular class, this everything means I will take almost 1, 2, 3, 4, 5, 6, 7. This is a regular class. I give actually 24 hours, almost 21 to 24 hours in business combination. And here I will give only, I will say less than 10 hours to complete everything. Whatever I do, I am taking each and every points. मजा आ रहा है. वेरी गुड. थैंक यू वेरी मच. मजा आ रहा है. मजा तो आना चाहिए. If you are enjoying the classes, if you are taking interest in any work, trust me, you will become successful. If you don't take interest now, always feel. Suppose if you are watching a movie, if there is no interest, you will not watch. Correct now. If you are playing a game, whether it is video game or what outdoor game, if you are not interested, you will not play now. Same thing. If you study, if you are not interested, you will not study. If you are interested only, then only you can study. And trust me, if you are not getting interest, it means there is something lacking. Means if you want to become CA and you are not getting interest, then to something is dangerous now. Jadoo, jadoo. Now happy? Okay. You want me to ask any questions? Then ask me. I'm here because today I have done early. I am not taking more than this. If any questions you have, personal question that you can ask me, I'll just reply it. In purchase consideration, what are the method and what are we doing? What are the method? There is only one method, whatever I have said. Just try to understand. In CA inter we used to do PC by two method. One is payment method, one is net asset method. Net asset method is totally bakwas. Means that is only CA inter bakwas thing. Understood now? Means simple, but purchase consideration means whatever you are making payment, and that payment information will be given the question. So net asset method is totally bakwas. We don't apply net asset method right now. So that bakwas thing will not be asked in CA final exam. Okay, sir. Have you done some method for purchase consideration CA final? I don't think any teacher will teach method of calculating PC. And if they are teaching means they are teaching CA inter. Prasanjit, have you done some method of PC? Trust me, have you done? In question 45, why we have not calculated DTL? Even the question is step acquisition. Correct. That is a good question. So actually that should be created, but they have not created. What I will do? Batao. That is the ICA solution. Share exchange method. Arey bhai, share exchange method means swap ratio. That is payment only. What is share exchange method? Share exchange method means swap ratio, na? So that is what? What is this, Baba? Share exchange method means I don't understand from where this method is created. Means the teacher will create the method na as per. Matlab they means what I will say, Baba. Chhod. Sir, is the deferred tax to be adjusted if INA is increased? Yes, it should be adjusted, but in the last question, they have already informed you that for customer relationship, there is no means you to ignore deferred tax, and therefore we have not created. Of course, if the INA will change, so of course the deferred tax will also change. But that type of question has not been given in institute material, and if they start asking that type of question, means they want to kill you. Okay, understood? Any other question you have? So will you allow me to leave? Okay. Hi friends, we are 140 plus listening to the session, but only 43 like. Arey, don't bother about this. I'm not teaching for like, I'm not teaching for views, I'm teaching for your purpose. Okay. But of course, if you like the class, if you comment, we feel happy, we feel motivated. That is the point. But chalo, I always I'm always with the student who are deserving. And trust me, there are very few deserving students. Means from my point of view, if 100 students are writing, only 25% students are deserving. It is my experience because they are only putting their effort, and out of 25%, 20% will pass. Means 75% are not putting their effort. They are not disciplined. They are not disciplined. They are not consistent. They are not focused. How they will pass? And if you are saying without discipline, without consistent, without consistency, without focus will pass, then the CA exam is very easy now. Means try to understand. If suppose I'm just giving one fact. If suppose any subject need me suppose FR any teacher will teach around 250 hours a regular class. Then from my point of view, at least minimum two revision is required. First revision should be 200 and second revision 150, and then 5 days last session. So 5 days means if you study for 12 hours also it becomes 60 hours. Means how many hours is required? 250 plus 200 plus 150 plus 60 means minimum 660 hours required for FR. Minimum 660 means to pass FR exam And to score good marks in FR, I'm saying good marks, I'm not saying 90 plus. Good marks means 60 plus. Okay, correct. If you want 90 plus, then more practice required. I will say one more revision is required. Okay, it depends upon how much you are practicing. But minimum two revision if you are doing, excluding last revision, you can easily get 60 plus. That is my experience. Okay, now in this, if you are not putting 60, nowadays the students see only marathon class and they go to exam. Means how can you pass only with marathon class, that is 50 hours, and many teachers will do marathon in what, 25 hours only. And after studying 25 hours, if you do one time revision of 60 hours, and if you expect that you will pass in the examination, how can you pass the examination, baba? So it will take three attempts. Then every time see marathon, then please just try to understand this much minimum effort is required. This much minimum effort is required, and not only for all subject. In my CA inter, I had watched one of your full AS. Sorry for not remembering the same classes which you had uploaded in YouTube. And I must say, I had never watched such detailed concept discussion as yours. Trust me, in CA Inter, though no one is teaching accounting standard. You know why in CA final students struggle? Because in CA Inter, we ignore AS. We only do AS from examination point of view. What is the difference between CA Inter and CA final? No. CA Inter focus on working knowledge. Means if you know working knowledge, you'll pass. Even though if you are not conceptual, you'll pass. But CA final require conceptual knowledge. Working knowledge plus conceptual knowledge. So now if you repeat, means if you think that CA inter we pass without concept, so CA final also will pass without concept. Only will do have working knowledge will pass. That mistake you do. Instead you say CA inter require working knowledge. CA final require thorough conceptual knowledge. That is difference between CA inter and CA final. Correct. So in CA Inter, if you are not studying AS in detail, so in CA Inter you pass, but you will struggle in CA final. And that is the major difference why even though you pass CA Inter, one of the toughest exam, even though you pass CA Inter exam, then also you struggle in CA final. That is the area where you do mistake. DT same. DT, but in CA Inter DT only working knowledge required, but in final what required? Thorough concept required. Audit, CA inter only working knowledge means only understanding knowledge, but in final, thorough knowledge required. Subject is same, but now more conceptual knowledge required, and their student lack. They think that we pass CA inter only by what? Only by working knowledge. Now we'll pass CA final. There we actually do mistake. Understood? Understood is fine. Have you understood? So now I will take a leave from you all. I hope whatever I am saying you are able to understand. Thank you very much. Once again, I will say be disciplined, be consistent, be determined. Then only CA final you will pass. Of course, everyone is studying, but how many of you are disciplined? How many of you are consistent? They will make it in CA final exam. Okay, sir. Bye bye. Love you all. Jai Jinendra. Jai Hind. All the best. Love you all. Bye bye.